Well, first up, if you're faint-hearted, better look away now, because it's over to Jayne Edwards with the latest news from the shell-shocked markets.
Alan, it was another day of red ink on Wall Street on Friday as investors scurried to safety over the weekend. The indices closed down a further 2%, marking their fourth straight week of losses. The main casualty on Friday was PC maker Hewlett-Packard, which plunged by 20% after announcing a major restructure and disappointing outlook, while Bank of America underlined the shaky economic situation with the news it will cut 3,500 jobs this quarter. The familiar themes of the unresolved debt situation in Europe and America's possible double-dip recession also continued to cast a shadow. Gold hit another record and rose 6% over the week as equity markets churned, while the oil price fell again in New York and the Aussie dollar finished just above 104 US cents. Global investors are bracing for another week of turbulence, with some major economic releases and the annual meeting of the Federal Reserve likely to set the direction. Looking at share movements over the week, the US and UK slumped by 5%. Europe continued its slide, down by 6%, while Japan and Australia suffered slightly smaller falls. Now with news on local stocks, here's Tom Elliott.
Well, as you just heard, the Australian share market had a pretty average week, with most of the damage being done on Friday. Still, we are in the middle of results season, and some share prices were impacted more by individual factors rather than the overall level of market gloom. Take the Australian Stock Exchange, for example. It announced a better than expected profit, primarily from derivatives trading. As a result, its shares were bought up. Wesfarmers had a similar experience. Its profit was better than expected. It seems that both the coal and coals divisions are doing well, and buyers flock to its share price. And also the Reject Shop had a big fall in profit, primarily due to the terrible floods in Queensland 6 months ago. However, hopefully those floods won't be repeated, and the Reject Shop share price was actually higher for the week. On the other side of the ledger, well, Woodside was fairly cautious about the outlook, and the oil price suffered dramatically over the week. Unsurprisingly, Woodside shares sold down. SAB Miller, not listed on the Australian Stock Exchange, however, it did go hostile in its bid for Foster's. It hasn't changed the price at $4.90 a share. Foster's shares were steady as a result in an otherwise falling market. BlueScope Steel hit new lows. It's got the carbon tax. It's got so many things working against it. The high Australian dollar. Some brokers I know still think BlueScope Steel is a sell even at these low levels. And Channel 10, it was down around 1% for the week. Board member and major shareholder Gina Rinehart, for reasons that no one can really work out, decided to sell about 1% of her holding, a rather strange decision, especially around results time. QBE result was okay, but the outlook wasn't good. As a result, the share price was down. Both ANZ and Westpac also failed to impress the market. Their share prices fell. And finally, Qantas. It had a one-day rally after announcing plans to sack 1,000 workers in Australia and possibly replace them with workers in Asia. Overall, Qantas down for the week. Winner of the week is Macmahon Holdings, up 17% after announcing a strong outlook for the year ahead. Loser of the week, and there were plenty of them, is Billabong, down 25% after announcing a big fall in full-year profit.